Vanguard are extremely accurate in their predictions, and they've just published their investment and economic outlook up to the end of 2024 and going into 2025. You can see it on the left hand side, but I'm going to summarise it in this video, covering the key elements including interest rates and growth rates in markets such as the USA, the UK, China, Canada, Japan and emerging markets. Let's get into it. Vanguard believe economic growth in the US will be about 2% this year and around 2.2% in 2025. That's because inflation is now well under control and will end the year at about 2.8%. That supports the view that interest rates will actually drop by 0.25% in both November and December this year and end 2024 at around 4.5%. Believe it or not, the UK actually looks quite exciting at the moment. Although all eyes are on the autumn budget on October 30th, interest rates are predicted to drop by 0.25% in both November and December this year and by 0.25% in March, June, September and December next year, so that by the end of 2025, interest rates will be around 3.5%. Economic growth is predicted to be 1% this year and 1.5% next year, so that's showing some promise for UK investors. With Germany on the cusp of recession, the European Central Bank actually cut its interest rates by 0.25% on October the 17th this year. Vanguard predicts that there will be further interest cuts so that the interest rate is around 3% by the end of the year. That's because economic growth in Europe is very low at the moment and it's predicted to be about 0.6%. That's because inflation is still high at around 2.8% and the big goal for Europe will be to lower inflation in order to stimulate economic growth next year. China is going through a bit of a rocky period at the moment, but the Ministry of Finance did pledge on October the 12th that a forthcoming fiscal stimulus would address the property market and local government debt challenges. This enabled Vanguard to actually predict that economic growth in China would be about 5% for this year and inflation would be around 1% for 2024. If the government of China can pull this off, then it should stimulate economic growth in 2025 and beyond. There aren't too many updates on Canada, mainly because the monetary policy remains restrictive to try and pull down inflation. But it is predicted that the Bank of Canada will drop its interest rates by about 0.5% by the end of 2024. Core inflation will be around 2.1% and economic growth will be around 1.25 to 1.5% for 2024. After decades of economic and market stagnation, Japan is actually predicted to be on the path of a sustainable rebound. Economic growth in 2024 is only around 0.24%. However, in 2025, it's predicted that economic growth will be materially stronger in Japan. There are two big stories coming from the emerging markets. The first one is from Brazil, that went through a sustainable drought that led to a price increase in goods and services. The Bank of Brazil set its policy rate to 10.75% in November, and that's predicted to increase even more to try and tackle the rampant inflation. The other big news is coming from Mexico, and the pace of core inflation fell for a 20th straight month to 3.91% year over year. The central bank cut interest rates last month for the third time this year to 10.5%, and with core inflation falling, the bank is actually predicted to do additional interest rate cuts. However, peso, the central currency of Brazil, is going through a depreciation period, and that remains a huge concern for Mexico. So I've just absolutely bombarded you with numbers, and you're probably thinking, what the hell does all that mean? Well, Vanguard actually also provide this figure, which shows the expected annual percentage return of different investment markets. And on the third row, what you can see is that's the highest expected return, and that's for the global ex-US developed markets. So that's the UK and Europe predominantly. And the expected return is about 8% per year for the next 10 years. And if you look at the US equities at the top, they're predicted to be around 4% return per year, mainly because so many people are invested in the US markets, it's already overpriced. So what they're saying is, with inflation coming down in places like the UK, some of their stocks may actually be undervalued, and it's a very good place to invest right now. This leads me on to my next point. If you've got any stocks at all that are listed on the London Stock Exchange that you want me to analyse, then leave it in the comments below and I'll do a detailed analysis video on the stock of choice. Hopefully this video has provided a bit of guidance on where to invest your next deposit. If you like this no clickbaiting type of content or found this video quite useful, then please remember to show some support by leaving a like and subscribing to the channel.